Imagine opening a trade and within minutes or a few hours, price moves to your direction. No drawdown, no stress. This is rare, right? But it doesn't have to be. Most traders focus more on indicators and signals that they completely ignore the power of high quality entries. In this video, I'm going to show you a step-by-step breakdown of the exact strategy that completely changed the way I trade. This isn't some random setup. It is a rule-based strategy that combines structure, demand and supply, and liquidity to give you a sniper entry with maximum reward. If you have been entering too early, too late, or getting stopped out before the real move starts, this could be the strategy that changes everything for you. Without further ado, let's jump in. But before you do, I'm James Reje. I'm a forex trader and I want to teach newbies how to trade like pro. All you have to do is to click the subscribe button, turn on the notification bell so you can get notified whenever we drop a new video like this. And also don't forget to join our trading community. There we share trading tips, we share trading guides and trading signals that can help you become a profitable trader. The link to our trading community will be in the description of this video. Don't forget to join. Now let's jump in. To get a sniper entry that can give you 10x results, the first step is to mark out your demand or supply zones. As you can see from this area, we have our demand zone here because of this massive impulse move. Okay, so now if we should mark out our demand from this 4 hours time frame, we are going to have something like this. So this is what we are going to have. So if we should put our long position at this demand zone, we have something like this. This is just 1:3 risk to reward. Now the question is, how can I make 10x profit, 10x results from trading this strategy? First, you find your demand or supply zone from the higher time frame, which can be 4 hours time frame or daily time frame. Then second step is to refine your zone by using the lower time frame. This can be your 1 hour time frame. And the last step, which is the most important one, is to get your inducements and enter at the sweep of that inducement. This can help you get a sniper entry and then X your results. Therefore, the first step is to mark out your demand or supply zones from the higher time frame. That is this one. We have marked out our demand zone. So the second step is to refine this demand zone by going down to the lower time frame. So to refine it, we are going to go to 1 hour time frame. Looking at this, we can see this is the demand zone. Okay, so to refine it, we are going to look for impulse move from this zone. And if we zoom this, you can see this is an impulse move. So we are going to mark out our demand zone from the beginning of the bearish candle before this big move. So we mark it out as our demand zone. So this is unmitigated 1 hour demand zone from this 4 hours demand. So now where is our inducement? If we zoom it very clearly, you see this move did not reach this demand. Your demand zone should be the last bearish candle before the big bullish move. And as you can see, this did not reach the last bearish candle. So this is our inducement. So we also mark it out as inducement. So now we have marked it out as our inducement. Now our goal is to enter at the liquidity sweep, not at that inducement. But before we enter the trade, we should ask ourselves, where is our take profit? That is our target. We can zoom out. If you zoom out, you can see this is our resistance level. So you can choose to take your profits at this resistance level, or you look for a supply zone. Looking at this here, you can see this level is a supply zone and this level is a supply zone as well. So we mark them out. So now we can choose to take profits here or here. So now when should we enter the trade? If you zoom in again, you can see our goal is to enter at the liquidity sweep. Now we have our 1 hour demand from our 4 hours demand and we have our inducement. Now don't enter the trade at this inducement, because if you enter the trade at this inducement, the sweep will take you out before the real move occurs. So therefore we will put our entry position at this 1 hour demand, and as you can see, the sweep just mitigated the 1 hour demand and went straight to this first supply zone and this second supply zone. So if we put our entry at this 1 hour demand and cover the low, you'll see that this is 1:8 risk to reward. So that is if we target this first supply. But if you target the second supply, it will be 1:10 risk to reward. So remember this. First method is to mark out your demand or supply zone from the higher time frame. The second thing is to go to the lower time frame to refine these points of interest. And the third thing is to wait for inducements. Then your entry should be the sweep of that inducement. Now this is USD JPY. We are also going to try this on BTC USD to check if it really works. So this is BTC USD on 4 hours time frame. As you can see, we have a trend line break from here. So this trend line break shows that the trend is about to shift. So the first thing is to mark our supply zone from this place because we are looking for a short position. Now, if you mark out our supply zone from this 4 hours time frame, what we are going to have is this. So this is what we are going to have. Make sure you know how to mark out the accurate supply and demand zones. Why is this a supply zone? Here we have a drop and a base, then another drop. Whenever you see a drop, base and a drop, then that base should be your supply. And the same thing occurs at demand zone. If we have a rally, base rally, that base should be your demand. Okay, looking at this, you see that this is our 4 hours supply because of drop, base, drop. Okay, so now this is our 4 hours supply, but we are not going to trade from here direct. We are going to go to 1 hour time frame to refine this supply. Remember, the first step is mark out your point of interest in the higher time frame, go to the lower time frame, then refine these points of interest, then wait for inducement, and your entry should be the sweep of that inducement. Now this is 4 hours time frame supply. We are going to go to 1 hour time frame to refine this supply. So this is 1 hour time frame, and as you can see here, drop, base, drop. So at this base should be our supply zone, but where should we mark exactly as our supply zone? The last bullish candle before the bearish drop should be your supply zone. Now we mark it out. Now we have our supply zone. Now where is our liquidity? If you look closely here, you see that this move did not mitigate this supply before dropping, so it is our inducement. Now we have our supply zone, which is this, our inducement. Now we should enter the trade at the sweep of that inducement. If we enter the trade, we will have 1:10 risk to reward, and this is much better than entering the trade at that 4 hours demand, because if we enter the trade at that 4 hours demand, we will have 1:3 or even 1:4 risk to reward. But if you refine your points of interest, now get to an inducement and you enter the trade, you get 1:8, 1:7, 1:6, or even 1:10 risk to reward. This is how to get sniper entry that will increase your results. In summary, you can mark out your demands or supply from the higher time frame, like the 4 hours or daily time frame. Then go down to the 1 hour time frame to refine these points of interest, that is the demand or the supply zones. Then you can wait for inducements, and your entry should be the liquidity sweep. This can give you a sniper entry with maximum risk to reward. And don't forget to apply appropriate risk management. Also, don't forget to join our trading community. Use the link in the description of this video to join. For now, good luck, goodbye, see you at the top.